Well, earlier today I spoke to Italtile's Chief Financial Officer, Brandon Wood. The results were released today for the year to end June, and the big news there is a special dividend of 50 cents a share. This in addition to an 8 cents final dividend, kind of puts it into perspective. The company did well, double-figure growth in earnings, but that special dividend was what I wanted to find out about, and that's the first question.
Well, I mean, over the last couple of financial years, as you know, we've built up the cash balance. We always had the prospect of an acquisition on the cards. We weren't really sure around the extent and the likes of the acquisition. I mean, that filtered through in the last financial year with our ceramics industries investment. I think to some extent we've always been accused of having a lazy balance sheet. So we've taken heed. We've looked to really work off our capital structure. The business is highly cash generative, as you've seen. I mean, after outflows of 1.3 billion rand in the year, we still ended the year on a pretty solid cash balance. That balance continues to grow. So to some extent, to not only improve the return for investors, we've also looked to maybe remove some of the complacency that comes with a high balance. There's been a big drive to improve our efficiencies in the business and our cost containments and the likes, and this is just another mechanism where we can make sure we kept on our toes.
Well, in the context of the business, it's a lot of money that you're giving back to shareholders. If you have a final dividend of 8 cents and here a special dividend of 50 cents, the share price has reacted accordingly, up 8% today. I guess that was not unexpected.
No, I mean, the special dividend is not unknown in our particular organisation. I think this is the third or fourth that we've actually paid. By no means are we setting a trend going forward, but yeah, I think a lot of value has come from the shareholder investment. We've built up quite a sturdy property portfolio with very little leverages, as you guys would know. So yeah, it's probably time to give back something to the shareholders.
You mentioned the ceramic industry's investment, 20%. Is that first of many?
So we'll see as time progresses. It was important for us to get that strategic investment in there. Ceramic industries is important for our long-term growth strategies in terms of supply of product. At this point in time, essentially no intention to acquire more, but we'll see as time goes on.
A vertically integrated model is becoming a lot more popular. We've seen many companies on the Johannesburg Stock Exchange flourishing as a result of it. Is that part of what's driving you here, given that ceramic is your biggest supplier?
Absolutely. Our supply chain was really critical in making sure, basic retail principles around right stock, right time, right place were in place. It's been really an important part of our success story, our integrated supply chain. For sure.
Well, we'll be watching that with a lot of interest. Something else we'll be looking for is your moves into other parts of Africa. 17 stores, but you didn't add to them in the past financial year.
No. So we recently opened an Nairobi store, or when I say recently, within the financial year, and that's done pretty well. Like all other retailers, we face a bit of challenges around logistics. Moving of stock is difficult, especially with our particular type of stock. We still believe there to be potential in Africa, yes. We have pieces of land in Zambia and Uganda, for instance, that would potentially be developed in future. But our focus remains on South Africa. We think there's still lots of opportunity in South Africa and the immediate neighbouring countries.
Before we come back to South Africa, you do also make mention of congestion in the East African ports being a challenge.
Absolutely. I mean, as I said, the logistics is proving to be a big challenge for us.
How long does it take you to get product there?
Generally, the lead time is about 6 weeks on product, but it ends up at a port. The congestion, we've been faced with scenarios where stock sits at a port for 1, 2, or 3 months. Obviously, that impacts the retail operations. You might have a situation where the store's out of stock for an extended period, and all of a sudden there's a huge glut of stock that comes in, and that in itself has its own challenges in terms of managing the movement of that stock.
So the practical realities are very real.
Yeah.
Back in South Africa, your turnovers are up 11% in this past financial year. Yeah. Is that a reflection of the home improvement industry or of construction generally? All
right, so that 11% is broken out between, it's our system-wide turnover, so it's broken up between our corporate environment, the company-owned stores and entities is actually up 16%, and the franchise network is up 7%, although, that's really a function of the geographical location of our franchise stores. Yeah,
the underlying market? It sounds buoyant if you look at your company stores.
So we definitely, there's been pressure on new build. The growth is coming out of the renovations market still. And we're particularly seeing good growth on merch categories outside of tiles, like our brassware, like our sandware and the likes.
Mm. Also, another trend, and perhaps it's a bit early to call it a trend in this period, was that your company-owned stores expanded. You added 5 there, but franchises not.
Yeah, I mean, and that's really the one-off. So it's a bit of a two-page story. So we've got the top tier network will be expanding going forward. That will be predominantly franchised. The franchised model is still very important for our business, given our flat structure, our value of entrepreneurial spirit and partnership. But what we've seen in terms of the move between franchise stores and corporate stores is predominantly in the CTM space. And that's a function of franchises coming to an end, the franchise terms coming to an end, and us looking to take back stores and perhaps improve the environment before we look to re-franchise again.
A bit like what Woolworths did.
Oh, I understand Woolworths actually did a reacquisition of most of their franchise stores.
Is it similar to what?
No. So our intention is always just to maintain that franchise network, but we'll bring it in, do a bit of panel beating, and look to re-franchise.
And that was Brandon Wood, Chief Financial Officer of Italtile.